the street's weighing in on the events of last evening. Raymond James says we do not anticipate a prolonged market impact. Wolf agrees it's not clear this really changes the picture. TD Cowen suggests that this probe could hurt housing and slow bank deregulation, but the market seems to be voting with those first comments that I made, that this doesn't really do much to change the picture. How do you see it?
Kind of like everything else, hasn't done anything to change the picture. Venezuela, we keep getting these headlines about political actions, and people are weighing in, but for the most part the market has been just looking through them, and I think that continues because who knows what's really going to happen. Is anything going to come of this? I doubt it, honestly, so I think that's where the market's going.
Weiss, how do you think about it?
I think about this way, that the market has looked at all these points that have come up, the geopolitical risks that we keep seeing, the U.S. being much more aggressive, and looking at them individually and discounting them individually. So I question, when's the time going to come that they're going to look at them as a whole and say, hey, we've potentially got some problems here. Now, in terms of Powell specifically, he's going to fight, and he should, and he's going to stay there till his term expires in May. However, what it does at that point forward is perhaps troubling. Now, this is a market that's waiting until the event actually happens. It's unwilling to take a stand on negative events, and it's very optimistic on all events. To me, that's a cautionary sign. That's not a positive sign.
I mean, there's a belief, obviously, in the market. You hear it from executives privately. You see it from the stock performance that the so-called good pushing stocks higher just outweighs any of this type of stuff, whether it's telling defense companies you can't buy back shares, or telling private industry you can't own houses, or this thing with the Fed chair, or a number of other things that have happened. The good that's out there, the deregulation, the animal spirits stuff, the effects of the big beautiful bill filtering through, what's going to happen with corporate earnings, is just far more powerful than any of this other stuff, how troubling to some it may be.
For today, that's correct, but it goes back. They're basically, the bears are coming to a gunfight with a knife, right? And they're looking at each individual thing, saying, we can get by that. This thing with Powell, that's never going to happen. The Fed's always going to be independent. So right now, it's a glass half full market. I'm not saying that's going to change anytime soon, but it's a glass half full, and I don't think it's that. I think it's maybe even half full, half empty.
Well, I mean, Bryn, you look at the market activity since the start of the year, it's clearly a vote that it is a glass half full, or the market wouldn't look like it does. And the broadness that we've seen wouldn't look like it does either if the market didn't fully believe that.
Yeah, absolutely. I mean, I think that, you see it mostly acutely in small caps, as Joe had mentioned, and as we have a continued steepening of a yield curve, maybe we get a 5 handle on GDP next year. The consumer in aggregate is fine, whether the makeup isn't so fine, but the consumer in aggregate is fine. And then earnings are going to be, what, 12 to 14% are the estimates, really across that. So I think, the majority of those earnings estimates, once again, are coming from tech. But I think this catch-up trade, has legs. We have RSP, which has done well this year. And I think that what's been so important is, like this morning, the NASDAQ was down in the futures almost 1%, 80 basis points, and now it's up about 30 basis points. It shows you the strength of the market to be able to shrug off this. I mean, if you think about it, not just Venezuela, clearly, Powell and the DOJ is disturbing and probably a big waste of taxpayer dollars, but also you have Iran, and that is clearly boiling up, and that the market continues globally to go higher tells you that people are looking past these real events. They're not just headlines. These are real events that are occurring, that we've been able to be very strong, not only in tech, but to your point, much more broader, not only in the U.S., but overseas as well.
Not to mention, Joe, Fed independence has always been viewed as so sacrosanct that, some would suggest that this fully makes the ship has sailed on that issue.
Okay.
But the other side of that, too, is that the market expects rate cuts. And, whether this impacts that in any significant way, some are suggesting that it actually hurts the cause of the administration if they want rate cuts. Others would say, well, you're going to get rate cuts nonetheless, which is another reason why the S&P looks the way it does, rather than falling off of a cliff on this news and notion that what has been so sacrosanct for so many decades is fully gone.
I last sat with you on Wednesday. Since Wednesday, monetary policy has gotten easier. Why? Because the president went out and announced, Fannie and Freddie, I want you to go buy $200 billion worth of mortgage bonds. That's unprecedented. That's monetary policy getting easier. I think you have to look at all of this collectively, and Steve makes some really good points on a reckoning moment at some point in the future. But when you're managing the portfolio, you're always saying to yourself, where does the risk kind of fall apart? And Scott, right now you have the ability, with very low volatility, you have the ability to hedge. The hedge really right now is in the precious metals market. If you're troubled about all of this, you're out there, you're buying gold, you're buying silver, which is up another 8% today. And guess what? You're able to hedge and get paid on it. So you're comfortable sitting in your portfolio positioning, awaiting what Steve anticipates at some point in the who knows future, the reckoning moment.
Well, why does Steve buy, wasn't it the GLD the other day?
Yeah.
I mean, hello, why do you think gold is up the way it is? Why has it continued to go up?
Look at it today.
Why is, let's put it back up, why do some say, you're heading towards, I don't know, 5,000? Because of events like this that are deemed to be destabilizing, pushing the precious metal of gold in that direction.
Yeah, look, I think there is protection being taken out. I also think gold is because some of the people that were hanging on to the dream of Bitcoin and others being inflation hedges or stores of value have seen the lie put to that narrative. So you've had those go into gold as well. Look, as I said, right now it's steady as she goes. But at some point, I do believe that there will be reckoning. And it's interesting. Amy and I were talking about this before the show. If people haven't read 1929, I'm only a third of the way through it. But I'll tell you, there are definitely similarities between them, which was a highly speculative investing environment that led to the crash.
Right.
And we're seeing that kind of speculation.
Let's go to Eamon Javers. He's at the White House with the very latest. By now, we all know, of course, about the probe. We've seen this unprecedented response from the Fed chair on video last night. What is the latest as you stand on the North Lawn, Eamon?
Well, Scott, what we saw this morning is a powerful group of former Federal Reserve chairs and Treasury secretaries, including Alan Greenspan, Ben Bernanke, Janet Yellen, and Robert Rubin. They all released a striking joint statement this morning in defense of Federal Reserve independence and in opposition to the Department of Justice's criminal investigation of current Chair Jay Powell. In it, they write, "This is how monetary policy is made in emerging markets with weak institutions, with highly negative consequences for inflation and the functioning of their economies more broadly. It has no place in the United States, whose greatest strength is the rule of law, which is at the foundation of our economic success." And a source familiar with the DOJ investigation confirmed to CNBC last night that it is being run out of the U.S. Attorney's Office for the District of Columbia, which is run by U.S. Attorney Jeanine Pirro, a longtime political ally of President Trump. Now, the president, for his part, told NBC News yesterday that he doesn't know anything about this DOJ investigation, Scott. So that's where we stand as of this morning. I've asked the White House for a reaction to that statement from the former chairs. We haven't got a response from the White House just yet.
He may claim to know nothing about it, but Eamon, what we've seen is that he expects this Department of Justice to operate in many different ways than traditionally it has in other administrations. Is that fair?
Yeah, I mean, you talk about Fed independence, DOJ independence has been a long-standing sort of rule of thumb or norm in Washington. The president does not operate that way. We've seen him give orders to Pam Bondi, the Attorney General, over social media in the past. This president expects the DOJ to do what he wants it to do. And in this case, the president says he's not familiar with this investigation, but certainly a lot of his political allies are, right? FHFA head Bill Pulte pushing for this this argument as far back as last summer that Jay Powell had lied in his testimony up on Capitol Hill. Lying to Congress, of course, is a crime punishable by up to 5 years in prison if you're tried and convicted. And we see Jeanine Pirro now leading this investigation inside the Department of Justice. These are people very close to the president who are making the case or carrying out the investigation that something deeply untoward happened here. And overall, you're looking at an effort that would end up putting the Fed chair in jail if it's successful.
All right, Eamon, you'll keep us up on any other headlines that move. I know you will throughout this day. Thank you very much.